Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 16th of October, 2023, about 6:10 p.m. Central Time. Sorry I couldn't make it to do any of the videos over the weekend. As I told you, I had a medical procedure. I'm going to have one in November and December. I get these. I used to get them every year. When COVID came, I stopped getting it. I didn't do it the year after. Went and saw my skin doctor, and they said, no. You got to take it, and it's time to do it. I've been doing this 20 years, so it's nothing new. It prevents melanoma. I'm very fair. If you've been very fair, you might want to talk to your doctor about certain types of skin treatments, but you get light sensitive for up to 60 hours. So light sensitive, you got to be in a dark room. So I can't write my reports. I can watch TV, can't be in sunlight of any type. My wife gets pissed because we can't even have candle lights on when I'm eating. So she has to leave the room and I just have it by LED and then I leave. It's really that way. And I have tried to play games with it and you get burned very fast. So not worth it. But now I'm fine. Back in the camera lens, and as you can see, the lights are fully on me and we're just fine. So let's talk the markets because that's what this is about. Friday's event was the market again prepared for the full army invasion. Now remember what I'm saying, army invasion, ground invasion of Gaza. It didn't happen. Instead, what happened was another corridor was in theory opened. The idea was also that Rafah, by Egypt's coast, the border with Israel, was going to open and let in a caravan of medical goods. That hasn't happened either. Americans that thought they could get out through there were supposed to be let out into Egypt. That hasn't happened either. A lot hasn't happened. Today you saw, if you watch the national news, Secretary Blinken was in Israel after visiting all through the Middle East. And to make a long story short, he was with the War Cabinet of Israel, trying to talk to them, probably trying to talk this whole thing down. And they got attacked by missile fire from Hamas. They had to run into their shelters. President Biden's talking of going there. Why? No, this is a bad idea, okay? Big target, bad idea, stay home. All right, you've got your head guys there. Israel knows you're behind them. The missiles are flying. You don't have to put yourself in war's way. This is craziness at its finest. The good thing is the Biden administration today did, and I want to use the word did, do some good things with Venezuela, and that oil's going to flow. And Venezuela, in return, is opening its elections up. So that's good. We have frozen Iranian money of $6 billion, but they're not talking about all the other monies that are out there that the U.S. has quietly let go. I mean, there's a lot that you're not told. So what do you do with this? Let me explain my experience, and that's all that I can give you. I've been a broker since 1969. I've seen military conflicts. As both a broker, I owned a stock firm, owned commodity firms. So I've been around this, the horn, so to speak. You're at what I call the violent stage, which is where the threats are there. The odds are very strong that the U.S. is going to go in. It's no different than when we threatened to go back to Iraq, and we eventually did, if you'll recall. You then enter the next stage when the army goes in. But how do the markets react? This is where the markets, the gold and markets like that, rallied the most, which they did on Friday. And then a little reality sets in. And once the war gets going, how much more war can you get? We'll hear the atrocities. We'll see the deaths. We'll see all that. Okay. But you don't get worse. And then eventually the war ends and the market goes the other way. I hope you understand there's a B, and a C level that this goes through. You're in the A level right now. So the dollar gets generally a strong bid. The gold's rallied in spite of that because traders are going, there's that gold hedge. I want to own a hard asset as this all takes off. It made sense, but nothing happened. So you deflate a bit. You went up into the 1950s and you've pulled back into the marketplace. And the odds are that when the market, when the invasion happens, and I do believe there'll be an invasion, away you go. There's now 199 known, according to the Israeli Defense Forces, hostages. An Israeli hostage did get on TV today. The Hamas group is saying that they would like to let go under the right circumstances of foreign hostages that they didn't know they were foreign when they took them. And now they'd like to let them go. Okay, you want to let them go? Let me share this with you. You probably dial up and you say, we're sending them through port A, don't shell for 2 hours, and we'll let them all go. Want to bet that the Israelis would not fire a shot? That's not what they're doing. I hope you don't fall for this nonsense. We should all be very upset of the anti-Semitism and anti-Palestine feelings all through the country. Palestinians are probably a good people. Israelis are probably a good people, okay? But you get elements within everything that are always problems. And we, as Americans, should remember, we're all foreigners here. Come on. This craziness has got to come to an end. So when I look at the S&P as a trader, I see resistance in the 44-47 level. So I think the pro money is probably looking there to go short, believe it or not, with stops over this area right here. When I look at the Fibonacci count, I brought this up for you before I think it was Thursday or Friday. And you've made your 38% retracement. That's the first part. You might go to 50% at 44.61. See that number again? Let's come back here. It sort of ties in with the 44.47. You know, I always like when things come together. You look at it and you go, that's interesting. I certainly wouldn't want to see prices all the way up and over that high of the 45, probably 45.50 area, roughly. Okay. The next chart shows that you're in an uptrend, higher lows, higher highs. You're sort of now consolidating to do something. The market's trying to find support at the 18-day average. You know you have a problem on the long side if you suddenly get under this level right here, 2 days ago's low, and that number was specifically not here, but here, at 43.41. That would give you an idea, that rally to the upside's in trouble, probably going back to at least the 200-day average, and if that gave ground, the lower band. You'll notice I'm not talking a lot on the upside because you're right at the resistance already. You're starting to get up to the 44.30 area, to this 44.74 level. Those are your resistance points. They're staring you in the face. Are you overbought? You are. So I'll let somebody else want to buy a war environment. Now, did I write a bullish report and say that I think a bottom has formed in here? I didn't write the report. I recorded the report. And I said to you, I thought the bottom had formed here on October 4th. I'll stand by that. I don't think you're going under that very easy, if at all, in the near term. What about resistance in the NASDAQ? Well, why would I tell my client, let's go and get long into the 100-day average, first challenge of it where it's failing right now, and the upper band. And you're going to say, because it's going higher. I get it. So you're going to tell me it's going to get over the Bollinger Band and only 5% you stay over it, but this time is different. Enjoy yourself. In the Dow, you've got the 200-day average. You've got the upper Bollinger Band and you're overbought. You're not trending. You have a lower low, higher high. This rally was set up from this outside day down. If you've taken my course, here's an outside day, down. So that ends this rally to the 18-day average in theory. Now, if you take out that high, it's called a bear trap, and I typically look for the closest of the next moving average or a Bollinger Band. I'll be a son of a gun, making you run for it right now. You're in trouble if you take out that low again. Then the market's saying it's even exhausted that part and coming back. So that's how I'm reading that particular chart. In the Russell, I didn't want to skip that, it's by accident. You had lost the embedded reading. You got up finally here. Today I'm hearing traders come out and going, they like the Russell. This is where the market's coming alive. They have been saying that on the small caps. I swear to you, my friends, all the way through. Don't fall for these guys. In a war environment, in a high interest rate environment, I could be very wrong. This is not the group that I would think is going to do the best of the group. Not at all. let me put it this way. Small companies, 40% increase in bankruptcies this year because of high interest rates in part. So be careful. In the 10-year notes, by the way, Rite Aid went bankrupt today. You saw that in the chain, the drug chain. They'll restructure it. They'll be back. Higher lows, higher highs, which means the creditors eat the losses. The market gets up to the fight right here. This is not a bullish chart. It's not a bearish chart. It's nothing. That's what's wrong with trading right now. You have a lot of nothing going on, and traders are trying to find a reason to be in, and they get stepped on during this period. The hardest thing that I have is when people pay me to give them trading advice and I say, don't trade. Do you not think that I realize some of them go, I can go out and get a guy that's going to tell me to trade? I'm sure you could. Any jerk can tell you to trade. You got to trade what's there on the chart action. And the charts are so darn clear. Higher highs, lower lows, sort of drifting. They're not telling you to do anything here. If you're making that up, God bless you, okay? In the dollar. So I think the dollar is going to try to find its support at 105.97. The next resistance is 106.87. I would think, doesn't mean I'm right. I would think the moment we see boots on the ground inside of Gaza, that the dollar all of a sudden jumps through a prior high, like I think some traders will buy yesterday's high, not today's, Friday's high, looking to get back into the 106.87, 106.90 level. I expect it. This could be a whole consolidation zone to carry this market up to the 110. A prolonged war environment, a month-long, keeps the dollar well bid, doesn't hurt the dollar. People run to the safety. I did a piece today, if you'll notice, the Japanese yen isn't falling anymore. It's going sideways. Nothing changed. It's an easy short sale, but it's gotten a safe haven bid because you're away from everything by doing that. And that's what traders are looking for. They're confused right now. High interest rates, non-stopping high interest rates at this point. You're starting to see funds bail that bought too soon. And they're going, no, I think rates can get over that 5% level. I'm going to pull back a little bit here. I think my duration of time is wrong. I'm seeing that. I'm reading reports on it left and right. In the eurocurrency, here you are up and fighting your 18-day average. So your bear market rally there. I think the pros are going short into this. I think they'll use stops over that high, but I don't have a sell signal yet. I like when the swing line is down and the market's got the downside momentum. I don't fight my own work. The British pound, of all things, is throwing out a minor buy signal unless you take out the lows of Friday. Come right back here. One more. Of 121.27, the argument I can make is that you're going to make a move up here, going for that Bollinger Band at this point in time. So we'll see if I'm right or wrong, but that wouldn't surprise me, the 123.10 level. It's not a big play, but I could see that could be one there. In Bitcoin, you had a dramatic move. I prepped my traders, at least I said, listen, on Friday when this market saw that the SEC elected not to file the appeal, you just open the door for this market because you've now said, come on, boys, file your ETFs. The SEC doesn't have to approve them. They'll all be in court. And what is the grounds that the SEC can win on? I don't see any. Their shot, according to the court, was to file. They don't like the fact that no exchange runs these that is accredited by SEC standards. I get it. But that's not necessarily legal. If people want to do it, the court hasn't ruled against them. I'm giving you the gist of it. The shot was they wanted it to be there. Do I think this is good for the futures markets? No. I think what will happen is ETFs are going to happen. And when they do, you won't want to own Bitcoin futures or Ether. Why not just go for the product as an ETF without the cost that they have to buy futures and keep rolling those contracts? So it loses the security that what you know you bought was guaranteed by the government scrutinizing the the Chicago Merc, other exchanges that are, we'll call them certified exchanges with the government. Most of the other Bitcoin type exchanges, crypto exchanges, are not. I am not saying they're bad things. I am saying they're not accredited in those manners. The SEC was after it and they lost that battle, and you saw the move that happened. Now, this is wartime. This is a mixture also of the Saudis, the Russians, all holding oil off the market, and it's all happened at one event. For the Saudis, they don't have to say, let's cut production right now, because what's happened is the market's just sitting there for them in the Brent, sitting now at the 88 level. I'm sure they're happy with it. They don't need the publicity at this point in time saying, well, we got to keep production. We're going to shut in more to get the prices higher. They don't need that bad publicity. They'll let the war do it. So Hamas is doing their job, putting in the war premium, because Iran is just going to keep threatening that it's going to jump into the skirmish all the way through. I called it a skirmish. It's a war. They'll join into the war because they don't like what? Why should they jump into this war? They're not the world's protector, and the U.S. should just kick their butt. Go in, kick them. If the U.S. doesn't, let Israel do it. They have oil fields. They're sitting out there. They're open targets. I've said this over and over. They'd be very wise to be quiet or talk the talk, don't walk the walk. Should be probably the secondary, because that's what they're good at. And I'd be looking right here at that 87.92. It's still a support level, but how do you put a stop under 84? And that's what you're talking about, a $3 risk in the market. In the WTI, it's the same thing. If you're buying here, where else do you put a stop other than a recent low? I know you're going to find something else, and that's great. Is there a reason to be short? None. Would I want to be short knowing that the 300,000 plus troops are ready to go into Gaza, and I don't know what's going to happen with other countries joining into it? No chance. All right? That's what you're dealing with. That's the reality. In the heating oil market, I've been telling you, I think this is the market that I'm looking for the right setup again. I don't need a perfect setup, but I can't come in on a higher high and lower low that's got all this broadness in it. So I can't tell my clients where to get involved. Nat gas, this is the support zone. So it's finally pulled back into the support. I think you're probably seeing professional money nibbling here, stops under this low, which is still, for me, too far away in the 280 zone. Looking to see if you can get another rally up there is what they're probably looking at in the meantime. So you put it all together, that's the game plans that you have to come up with. It's not an easy time. For those of you that use TradingView, we have our suite ready for you, and we're working out now where we're going to be able to have, if you want to place orders through us, through your TradingView software, you're going to be able to. So we're working on that literally as I talk to you. I'm hoping to have it done in just a short period of time. And then for those of you that do that, you can work with our brokers, do other things. You'll place your own orders, obviously. We'll give you rates, our market information. You get an awful lot by placing your orders through it. So how do you get TradingView if you have it and you want my suite with all the different studies that we have and everything else? It's pretty darn simple. You go to iraepstein.com. It's actually in the top right, the client section area. If you give a click there, the drop-down menu will appear. And all you do is click TradingView, sign yourself up. The next business day, we'll turn it on for you. If you do it in the morning, we'll have it done by noon the same day. Anytime after 8 a.m., we'll try to get it done, but we do go home, my staff, by 3 or 4 in the afternoon. So you want to get it done before then, and away you go. And we'll talk to you and get everything set up for you. IraEpstein.com, move your cursor to the top right up here. That'll take you to the area on the website to sign up as well. I'm Ira. It's good to be back. I'll catch up with you tomorrow. Take care.